So hey guys, welcome to the Fibonacci Swings. Today, I just want to let you a trade breakdown which I has taken. So I shared this trade around when the price was around this area. When the price was around this area, 88584. So I shared this trade and look at this trade. So here is a screenshot from my Instagram. So with the I posted this with this you can see the line of breakout structure here, and you can also see that I had shared this trade almost in this area, and then you can see that area of interest which I was looking forward to. So now let's break down how I take this trade and how I captured 80 pips in the currencies. 80 pips in the currencies is a lot more because it's like capturing 600 to 700 800 pips on the gold is equal to capturing 70 to 80 pips upon the currency. So let's break down. So you can see that it's a 30-minute time frame chart. So I shade around here because see we was already in the bearish trend. So if we see in the higher time frame, we can able to see that price has come up to this area, and it was just a retracement down, and it has come towards this area, sipping up the liquidities, and price reacted to this area, and then price was just likely to shift here, but due to it did not close the candle here, so I did not take this break of structure seriously. So then I waited for here and I shared my trade almost here, that I will be looking forward to this area. This is 30-minute time frame, and it's a USD CHF pair. And now when a price got to this area, I shared my story, and now when price come up to this area, which I want to highlight with the red. So let's so this was an order block here in the discount zone. So if you measure it from below to above, it's in the discount zone. It is in the discount, so that in the discount zone any order block is very high probability. So now I have shared this was an order block here. So now let's go to the lower time frame and see how price reacted and shifted here. So let's rearrange this again. So here was a manipulation move when price came up to this order block. So you don't need to actually enter directly upon the trade. You need to wait for some sort of confirmation. So here is the structure. Then price came up here, and it's give a deep down push down, and it come up here, and it was a breakout structure and market structure shift. Then price reacted to this area, come up to this area. I entered here because the price was reacting to this order block. My stop loss was below this. If candle closes below this, so it was likely to be a liquidity sweep and accept. If candle closes below this, then it will be likely to a structural change. But we have seen a 1 minute structural shift, 3 minute structural shift, and now it was a 5 minute structural shift. That means the order flow has been turned bullish. So now we can see that price has turned bullish. So I entered almost here, reacting to this order block. So I will just likely to mark out the order block. So these two candles were my order block. These two candles. So I entered here. So my entry was around here is in this level. So here I did not wait for the structural shift because price was already bullish structured. So I did not wait for there. So my TP was around top. So I will just let you where was my TP. So in the 5 minute time frame, we have seen the breakout structure, microstructure shift, and now I have entered here in the this 5 minute time order block. So that price came up to this area, and from 4 a.m. to the 10 a.m. price was just likely consolidating and consolidating. So it take a lot of time for my trades, and I was very impatient, so I did not. So I just entered here almost also because my swing was completely say I try to take this level. I would likely to cancel my trade because there are only two probabilities: either to stop loss, either to take profit. So I entered here. So how I placed my take profit? So let's dive into the 1 hour time frame. Okay, so on the 1 hour time frame, we can see that price has come up to this area, and we have the liquidities resting above here. We can see the liquidities here, and here also there are some sort of equal highs. So here, but my major TP was how I select this. Let me show you. Using the Fibonacci tool, I top to down, I measure it. Okay, so this whole move I measure it, and this was in 1 hour time frame, and we got a shift here Now I entered here and I want to target a 4. Let me show you. I just go here. So this is my standard deviation tool. Sorry. So this was an liquidity area. So I go to here and I measure from here to here. This was my standard deviation tool, and here are my TP's scenario. Let me show you how. So let me show you my setting first. There are styles. So 0, 1. Let me off the 1. 2 and 2.5. These are my areas where I want to take my set my TPs, but majorly I use to these two because it gives me more high accuracy. Because see, this is 1, so let's assume 0 and 1. Some Fibonacci leg which I measure, and now I want to target above. So this is like trend based Fibonacci extension which I use. So in the two here we can see that there is some sort of liquidity presented here in the two. So I just selected this here. Now what was the I selected this. I mark out this area and here. So I entered almost this level. This was my entry. My stop was here, almost here also. Yeah, here. And my take profit was this 2.5 area, in which this trade give me roughly 1 is to 8 risk to reward ratio. It's very high to risk to reward ratio, but see, the problem is I have waited. So how much time I waited for this trade? This trade was almost how many hour long? This trade was almost 43 bars, 33, 1 day and 7 hour. So my TP was eventually hit here. So it was 1 day and 3 hour trade. So you can test the patience that in this sort of trades, it also get a lot of trade. But the problem is you need to focus upon the time, because in the high to risk to reward trades you need to wait for the time, and you need to wait for your trade to take the TP. So if I exit here and I was looking for the market structure, that market is likely to shift here. But if you see clearly, it was all about for this fair value gap which was forming up on here. So price take out this fair value gap and boom, it's up. So it's all about the planning of the trade, that how you plan the trade. And also the USD CHF pair is moving like in the London session and New York session. Asian session is all about the ranging markets. So this was all about my trade explanation. Hope you like it, and follow my Instagram at the Fibonacci Swings, that I am giving the trades for free. I am not giving full trades. I am giving up just ideas and zones, that where you can enter for the longs and shorts. So I have also put for the Euro USD story. You can watch it, test the area, and wait for some sort of structural shifts. And enter here. Euro USD can be the very good trade, but only if we get a structural shift in 1 hour, because price has been too much bearish from last 6 to 7 months. Hope you like this video. Share this video to someone who needs trade explanation like this. Thank you. See you all.